Hello, teacher. Hello, everyone. My name is Trúc, and I'm from Group 3. Today, our group will give you a financial analysis of Vietnam Airlines. First, I will briefly introduce you my team. I have 5 members, including me, Lê Như Quỳnh, Trần Xuân Mai, Trần Thành Đạt, and Nguyễn Ngọc Lan Anh. The table of contents of this presentation include 3 main parts. First, I will give you the introduction and then the analysis of balance sheet and income statement with Quỳnh. And then the 3 parts of ratio analysis will be presented by Xuân Mai, Lan Anh, and Thành Đạt respectively. Now move on to the first part, which is the introduction. As you know, Vietnam Airlines Trust Stock Company was founded on 15 January in the year of 1956 in Hanoi. Their headquarters located at number 200 Nguyễn Sơn Street, Boulevard, Long Biên District in Hanoi City. And you can access to the website by using this link on the screen. And on January 2017, the company share was legally listed on the Upcom share market exchange under the ticker symbol HVN. Moving on, is the number 1 aviation enterprise in Vietnam have 19,641 employees. They spread over 20 provinces and cities in Vietnam with 25 domestic branches and 31 international branches with a representative office. They also have 5 dependent accounting units and main business like carrying out air transport for people and cargo. They also in other business such as providing direct support for air travel. And additionally, Deloitte is the company that in charge of the audit of this airline. According to the MLI website, they have 100% ownership in 4 subsidiaries, including VAECO, which stands for Vietnam Airline Engineering Company, Skyback, Vietnam Air Patrol 1 member company, VIAGS, Vietnam Airport Rail Services Company, and VACS, Vietnam Airline Caterer. Next, we move into the board of directors. As you can see on the screen is the picture of the board of directors of Vietnam Airlines. Of the left-hand side is Mr. Đặng Ngọc Hòa. He is the chairman of the board, and the rest is the board member. We have Mr. Lê Hồng Hà, Mr. Tomochi Ishii, Mr. Trương Văn Phước, Mr. Tạ Mạnh Hùng, Lê Trường Giang, and Mr. Đinh Việt Tùng. And next, in the next part, will be presented by my friend Quỳnh. And for the better comparison, we will have Vietjet Air, which is the Vietnam Airlines competitor, to have you guys have a better look at this comparison. Thank you very much.
Hi, my name is Như Quỳnh. So I will tell you about the balance sheet between Vietnam Airlines and Vietjet. In this part, we talk about the current asset, long-term asset, current liability, long-term liability, and owner equity. So let's talk about the first one about the current assets. So I can be seen clearly the figure for Vietjet's current asset witnessed an upward trend, while all the opposites were true for Vietnam Airlines. Vietnam Airlines' current assets account for a quarter of the total assets, and this continued declines by 7,900 billion VND from 2019 to 2021, and which means that the company liquidity is low, and moreover, the Vietnam Airlines is state-owned enterprise, so the liquidating process will be slow because it's made not too many careful consideration and steps. And meanwhile, its competitors still remain the proportion of the current asset that's worth half of the total asset and roll in by 3,022 billion VND during the same period. And both Vietnam Airlines and Vietjet had a downward trend in the figure for the non-current asset. The total value of Vietnam Airlines long-term asset fell dramatically by 5,465 billion VND between 2019 and 2021. Vietnam Airlines also sold 3 airplanes in 2020 and 2 airplanes in 2021. And on the other hand, the figure for Vietjet's long-term assets decreased by 234 billion VND in the same period. And the percentage of current liability of Vietnam Airlines account for the largest amount of the total liability. Vietnam Airlines is a state-owned enterprise, so it can have a high credit limit to borrow a larger amount of money than others. And the government conducts the lockdown policy, which led to a significant decrease in the numbers of flights and the effect on the Vietnam Airlines profits and liability. Vietnam Airlines total debt went up from 57,840 billion VND in 2019 to 62,530 billion VND in 2021. Vietjet Airlines liabilities were 33,950 billion VND in 2019 and increased to 34,800 billion VND in 2021. And it's notable that there was a dramatic decrease in the number in the Vietnam Airlines owner equity during the period between 2019 and 2021. Vietnam Airlines was affected by the coronavirus pandemic, which result in being negative 21,900 billion VNDs in revenues and eroded total owner equity by the 22,140 billion VND. Fortunately, the owner equity was still positive thanks to the national executive approval of rescue package about 12,000 billion VNDs. And therefore, from 2019 to 2021, Vietnam Airlines owner equity declined sharply by 83 billion VNDs. And during the same period, Vietjet Airlines, the owner equity had an upward trend, rising from 40,900 billion VND to 60,854 billion VND.
To the income statement. Due to the COVID-19, the two business, Vietnam Airlines and Vietjet Air, displayed a close similarity to that in the given chart. After 2019, both had a sharp decline until the end of 3-year time frame. In specific, Vietnam Airlines from 2019 to 2021 declined by about 70,000 billion Vietnam dong from 2019 to 2021. However, Vietjet Air also noticed the same pattern. Its operational sales in 2020 were down 32,000 billion Vietnam dong from 2019 and further declining to about 12,000 billion in 2021. The reason for such a dramatic drop is profit is due to all the flying drop entirely, even the international routes. And then moving on to the cost of goods sold. As can be viewed from the chart, in 2020, the cost of goods sold of Vietnam had decreased by 87,000 billion Vietnam dong compared with the 2019 and still decreased to 37,000 billion Vietnam dong in 2021 afterward. At the same time, Vietjet Air also suffered the same fate when the cost of goods sold declined from 44,000 billion Vietnam dong to 14,000 billion Vietnam dong. The reason is just like the total operating revenue is due to the COVID-19. And then the total expense of both Vietnam Airlines and Vietjet Air drops from 2019 to 2021 as a result of the pandemic scenario. The company had negotiated and received support from and discount from the government and the partner. For example, the Airport Corporation of Vietnam offered a discount on 7 types of services that Vietnam Airlines used at their airport. The total expense of Vietnam Airlines dropped from 96,000 billion dong to 42,000 billion dong. In the same period, Vietjet Air fell more sharply than Vietnam Airlines when it decreased from 47,000 billion Vietnam dong to 16,000 billion Vietnam dong. And then moving on to the non-operating gains and loss, Vietnam Airlines recorded slightly decline in 2019 and 2022, only reduced by 1 billion Vietnam dong. Unlike Vietnam, Vietjet Air in that period increased nearly 1,000 billion Vietnam dong. It's because Vietjet Air in 2020 had deployed and explored new services. The board of directors also decided to increase the charter capital and the plan to issue the international bonds. But at the end, both companies faced the same loss. Vietnam Airlines dropped to 166 billion Vietnam dong. Vietjet Air dropped spectacularly to 8 billion Vietnam dong. Last is the earning per share. Earning per share demonstrates how much a profit company generates from its share of stock. And Vietnam earning per share dropped sharply from 2019 to 2021 from 1,654 Vietnam dong to negative 7,704 Vietnam dong. On the other hand, earning per share of Vietjet also dropped sharply, but fortunately still not as negative as Vietnam Airlines, decreased from 7,104 Vietnam dong per share to 131 Vietnam dong in 2020 and increased slightly to 139 Vietnam dong in 2021. And that's all for the analysis of balance sheet and income statement. The next section will be presented by my friend Sung Mai. Thank you.
So thank you for introducing me. I'm Mai, and I will analyze the liquidity ratio and efficiency ratio. So the first is liquidity ratio, or important group of financial metrics used to determine the debtor's ability to repay a debt in the short term without a need to raise external capital. And the liquidity ratio measures a company's ability to meet its debt obligations and margin of safety by calculating metrics, including a current ratio, quick ratio, and cash ratio. So the first is about the current ratio. So as we can see, Vietnam Airlines has its current ratio of less than 1, and which means the net working capital is negative. However, the current ratio has above 1, and it means they are possible to meet their immediate debt. So compare with the industry average, The current ratio of industry is lower than 1, but it's still a bit higher than Vietnam Airlines. So Vietnam Airlines is facing financial difficulties, and it may reflect an increased probability of distress or default. The second is quick ratio. Similarly with current ratio, the quick ratio Vietnam Airlines is less than 1, in which indicates the company cannot afford to pay a short-term debt immediately. So we can see the index of Vietjet demonstrate that the company's liquidity is still solid, and it doesn't need to worry about selling goods to pay off the obligation on time. So Vietnam Airlines is spending resources on inventory rather than retaining assets, and that may be converted into cash more readily to be flexible and active in paying current liability. And the final is cost ratio. In general, the movement of Vietnam Airlines, Vietjet, and industry average also dropped gradually throughout that period. However, if it is a stable economy using an immediate ratio to evaluate the company liquidity may be inaccurate. And because the company has a lot of unused financial resources, and it indicates that it uses capital efficiently. So therefore, this ratio is just helpful measuring the company liquidity during the COVID-19, when inventory are unsold and receivable are difficult to collect. And the next part is efficiency ratio. It's a metric that shows how well the company's items are selling. The first is inventory turnover ratio. So it can be seen that Vietnam Airlines, Vietjet, and industry average inventory turnover fell in 3 years. However, the Vietnam Airlines inventory turnover was still lower than competitor in particular, and the industry in general. So the decline in this period may be because of COVID-19. So the second is the receivables turnover ratio. So in overall, the index of Vietnam Airlines, Vietjet, and industry average receivable turnover ratio fell through that period. But Vietnam Airlines still has a high receivable turnover ratio that demonstrates the firm's capacity to recover customer debt is excellent, as well as the company has quality business partners who can return loans fast. And the final is total assets turnover ratio. There was a downward trend of all, but as we can see, the Vietnam Airlines total assets turnover ratio was higher than the rival and the industry average. So Vietnam Airlines has a greater the overall assets turnover ratio. The more efficiently the company's assets are employed in production and commercial operation. So this is the end of my part, and the next part will be presented by Lan.
Thanks, Mike, for the introduction. My name is Lan, and I will continue to analyze the long-term solvency ratio. Solvency ratio are any form of financial ratio analysis that measure the long-term health of a business. In other words, solvency ratio prove or disprove that business firm can honor their debt obligation. Solvency ratio also help the business owner keep an eye on downtrends that could suggest the potential for bankruptcy in the future. The first one, the total debt ratio. It measures a company total debt to its total assets. It measures a company leverage and indicates how much of the company is funded by debt versus assets, and therefore its ability to pay off its debt with its available assets. The formula to calculate the total debt ratio is total liability divided total assets. In the bar chart, it can be seen that Vietnam Airlines total debt ratio has grown year by year. By 2021, the growth has reached 0.99 times. The rate over the years is higher the more degree of operating leverage Vietnam Airlines has, and therefore the greater the financial risk. According to the report, 3 years of the impact of COVID-19 pandemic caused the undistributed profit on the company balance sheet to be negative billion Vietnam dong. To know whether this ratio between total liability and total assets is healthy, we need to see similar company in the same industry, and here I have the industry average. So the ratio of industry average is also seen in a similar range. It means that Vietnam Airlines is doing quite well. The next one, the debt to equity ratio. The debt to equity ratio similar to debt to assets ratio. In that, it indicates how a company is funded. In this case, by debt, The ratio looks at how much of the debt can be covered by equity if the company needs to liquidate. This ratio is calculated by dividing total equity by total assets Airlines are a capital-intensive industry needing to purchase and maintaining expensive aircraft and pay for the fuel to make them move. So looking at the bar chart, it is clear to see the dramatic growth in 2 years, 2020 and 2021. It means that Vietnam Airlines used a lot of debt to finance its business and maximize profits. However, using too much debt exposed the company to a higher level of risk. So we come to the third one, equity multiplier ratio. It is a leverage ratio that measures the portion of company assets that are financed by equity. It is calculated by dividing the company total assets by the total shareholder equity. So the equity multiplier is also used to indicate the level of debt financing that a firm has used to acquire assets and maintain operation. So continue to look at the bar chart. We can clearly see the dramatic growth between 2020 and 2021. This high number shows that the company is heavily dependent on the debt capital. In 2021, Vietjet equity multiplier is much lower than Vietnam Airlines. This also means that Vietjet enjoys the less leverage and can comfortably pay its debt. And in the next part, that will continue to analyze the profitability ratio.
Hello, teacher. Now I'm going to present and analyze with you about the profitability ratios of Vietnam Airlines. So as the name mentioned, when it comes to their profitability ratio, we're going to discuss about how is effective the company create profit. So when it comes to the profit ratio, we're going to discuss about the first one, return on equity. The second one, return on asset, and the last one, net profit margin. So without any further ado, let's get into the first one that we're going to discuss about the net profit margin. So the net profit margin, as you can see here, during 3 years from 2019 to 2021, the net profit margin of Vietnam Airlines is the highest one compared to its competitor Vietjet Air and industry. However, when we look at the chart for the general review, we can see that the net profit margin of Vietnam Airlines decreased over year. And the main problem and the main reason causing this one is that because of the COVID-19 pandemic. So, but when we look back to positive side, we can see that it is higher than its competitors. So it is maybe caused by the efficient administration of Vietnam Airlines. So the next one, we're going to talk about the return on asset. So when it comes to return on asset, as you can see here, the return on asset ratio of Vietnam Airlines is the lowest one compared to Vietjet Air and industry average. Like for example, return on asset of Vietnam Airlines in 2019, it shows about nearly 3% compared to 9% of the Vietjet Air, and then this year decreased over year. So the reasons why the ROA ratio of this company is kind of low, maybe because of this company is unable to fully utilize its resources in order to increase its profit. And the last one, we're going to talk about the return on equity. The same trend happening to return on equity. Vietnam Airlines ratio is also the lowest one and is decreasing over 3 years, and it reached the lowest score in 2021. It was about nearly negative 400%. But when it comes to Vietjet Air, we need to agree that the return on equity of Vietjet Air decreased over year, but it didn't reach the negative point. So the reason may be because this company was becoming less effective at creating profit and maximizing shareholder value. And with all the problems and the data that I provide you, I would have some rare solution for that one. The first one, Vietnam Airlines, they need to reduce the access cost. Second, they need to increase their revenue. For example, they can launch some competitive pricing or sales promotion to increase the sales volume for this company. And the last one, it needs to reduce the operating expenses. Like, for example, they can reduce the labor cost. And that's all about my part. The next one will be presented by my teammate.
To sum up, Vietnam Airlines was affected significantly by the coronavirus pandemic. So it increased the liabilities, and so the financial pictures of Vietnam Airlines is really negative. And so especially in the long-term solvency ratios, it's a really high and increased dramatically, which means it is high risk and high risk when invest in airlines for Vietnam Airlines. And although Vietnam Airlines profit profitability ratios is higher than BTC and the industry, with Airlines is unable to fully utilize its resources in order to increase the profits and maximize the shareholder. So this is the end of our presentation. Thank you for watching and listening.